Hi guys, keep watching KS tutorials. They are the best.
Guys, keep watching KS tutorials. They are the best.
So the next one we'll be talking about is the differences between financial accounting and then cost accounting. The differences. So we'll talk about three differences, and then you read more on the others. But I will explain three differences in financial accounting and then cost accounting. So for cost accounting, it is not required by law. Cost accounting is not required by law. Do we get it? Cost accounting is not required by law. Initially, we said financial accounting is required by law. That is the purpose why we prepare financial statement. It is required by law. So this is not required by law. But this is required by law. Financial accounting is required by law, whilst cost accounting is not required by law. You can decide to have a cost accountant. You can decide not to have a cost accountant, but you must have a financial accountant. Do you see the difference? You must have a financial accountant who will be able to compile the financials for the company. But you can decide not to have a cost accountant in the company who will be running through your costing. That is you, the company. You can decide to. The financial accountant can decide to do that as part of his duties. But we need a financial accountant in the company. We need a financial accountant in the company to run the financials for the company. Are we okay? Okay. So the next one is this one. Cost accounting do not comply with GAAP. Cost accounting doesn't comply with GAAP. GAAP is, the full meaning is generally accepted accounting principles. Generally accepted accounting principle. Cost accounting doesn't go by these principles, but financial accounting goes with the principles. Financial accounting goes strictly by GAAP. They follow the GAAP principles. They follow the GAAP principles. So whilst cost accounting doesn't follow, accounting follows. Whilst cost accounting doesn't follow, accounting follows. So this is prepared for internal purpose, and this is for external. Financial accounting is prepared for external purpose. Cost accounting is prepared for internal purpose. Why is financial for external purpose? So let's say if an investor wants to invest in the company, the investor might be an external person. Someone who is here to invest in the company is an investor. So if the person wants to buy shares of the company or wants to even give the company loans, the person will need the financial data of the company. The person is an external person. Banks are external people, but they still need the financial data, the financial information of the company. But cost accounting, let's say you are running the costing of the company, how much you purchase something, the price you are going to charge for the product or the goods you sell or anything. That is internal. It is for internal purpose. You know how you are running your costing. You know how you are doing your internal. This is for, so cost accounting is for internal purpose. Financial accounting is because that's why it is required by law. This is not required by law because it's internal. It is internal. You decide to do it. But since this is external and it is required by law, you have to do it. That's why we also follow the GAAP principle because it is going outside. It is going outside. These are we okay with this one? We have other ones that we have a lot of differences. So you can read more to add up. You can read more to add up. Okay, so we now move on to what financial statement is. what is financial statement? What is financial statement? And then what are the things that make up the financial statement? So financial statement, let me read what I have here. These are forms of record of the financial activities of a business. So financial statement simply means the compilation of all the financial activities of the business. If you put all the financial activities that has taken place within an accounting period, if you put everything together, we have the financial statement. If you put everything together, you have the financial statement. So financial statement has components. It has components. It has about 5 components. 5 components. But now, for the basics, since we are dealing with the basics, we'll talk about 4. But it has 5. So we have the financial statement. We have the statement of profit or loss. That statement of profit or loss. You have the balance sheet. You have the cash flow statement, and then you have the notes to the account. In advanced form, you have the balance sheet changing. The name has been changed. Now it is called the statement of financial position. We have the statement of profit and loss and other comprehensive income. Statement of profit and loss and other comprehensive income, which is the statement of profit. Basic level, it is statement of profit and loss account or profit and loss account. The balance sheet. The advanced level is the statement of financial position. Cash flow is cash flow statement. And then we have other one called the changes in equity. That's for advanced form. That's why I don't want to. That's why I said we have 5, but for our purpose we are limiting it to 4. Later on, as time goes on, and then we are dealing with the advanced one, we'll add it and then we'll treat it. But for now, since we are at the basic level, we limit ourselves to this 4 balance sheet, which is now a statement of financial position, cash flow statement, and then the notes to the account. So the notes to the account captures the policies of the company, other information that will support the financial statement, the balance sheet, and then the other ones. Any other information that will support it goes to the notes to the account. Please, are we okay? Thank you. So now we move on to the limitations of financial accounting. Let me write it here. Limitations of financial accounting. Limitations of financial accounting. What are some of the limitations? First, it ignores vital information that lacks financial characteristics. So when we were beginning, I was like, financial accounting is the recording, is a collection, recording, summarizing, and then all these things of financial event that can be quantified in monetary terms. That is what I said about financial accounting. We collect, we record, we summarize, we analyze, we communicate economic events in monetary terms. So if the event is not in monetary terms, it is not accounting. It is not financial accounting, right? That is what we said earlier. Now, the limitation is any event that cannot be quantified in monetary terms is ignored. So if the event cannot be quantified in monetary terms, financial accounting ignores it. So it is a limitation. It is a limitation. Let's say we have customer satisfaction, which will benefit the company. But because we cannot quantify customer satisfaction in monetary terms, we cannot add it to financial accounting. It will be part of, maybe you can add it to cost accounting or something, but or non-financial accounting. But we cannot add it to financial accounting. Are you okay with that one? So we ignore financial accounting ignores non-financial information. Okay. Then the next one we are going to talk about is it permits alternative treatment, which sometimes makes comparison difficult. So when we talk about financial accounting allows other computations. So sometimes when you are comparing, it is difficult. Let's say you are using a company is using let's say reducing balance for depreciation, and then a different company is using a straight line method for depreciation. Comparing these two companies' assets or carried down assets will be difficult because once depreciation charge for a particular year will be higher than the other, so it makes comparing very difficult. It makes comparing unless there's consistency. That's another characteristics of accounting, consistency. Unless there's consistency in it. Okay, so it does not disclose the present value of business. So financial accounting, basic information or on historical data. So it kind of ignores present values of the business. So let's say you bought an asset 5 years ago. It is that price that you are keeping in your balance sheet. Unless you've done a revaluation, you've revalued the asset. So it uses historical data. You will be depreciating the old cost, depreciating it every year. That is it. So it ignores present value. It uses historical data. Okay, so to the most exciting part. You listening to me. Let's say if you decide to read accounting and read it very well, what are some of the career opportunities for you listening to me? That is where we are. The career opportunities. Career opportunities for you as an accountant. Sorry, for you, an individual who wants to read accounting. You are in JHS, SHS, you want to be an accountant, or you want to read accounting, not to be an accountant, you want to read accounting. What are some of the career opportunities for you? First, we have financial accountant. So we have an accountant, and then the accountant, we have two. You have financial and then cost. That's why we did the differences between them. So you have a financial accountant and then you have the cost accountant. So you can be any of the two. You can either be a financial accountant or cost accountant. Cost or even management accountant. Cost and management, they are similar. So cost or management accountant. You can be a financial accountant. Also, you can be an investment analyst. Investment analyst. Who is an investment analyst? Investment analyst is someone who can take, let's say you can take the financials of a company and then read and then understand and then advise someone who wants to invest in that company. So your job is to read and analyze companies' financials. How will you be able to analyze companies' financials if you don't have background in accounting? So you can actually read accounting and become an investment analyst, whereby you analyze the financials of companies and then advise other investors. You advise other investors as to whether they should invest in the company or not. You can be an auditor. Who is an auditor? An auditor is a person who audits the financials and operations of companies. How will you be able to audit financials of a company if you do not have the accounting background? So meaning you need accounting background to be able to be an auditor. So you read accounting and then you become an auditor. Accounting can lead you to auditing. You have external and internal auditors. External auditor is one which is employed by the shareholders, and then the internal auditors are employed by the management. Management wants to audit the financials before it goes out, and then shareholders also wants most of the time shareholders are not in the company, so they want to also understand if the information that is coming out is true and fair and represent the company. Management is, they are not embezzling funds, so they really want to understand. So they would employ external auditors to audit the financials before it comes out. Sorry. Also, we have tax advisors. Every company, if you operate in a country, you are supposed to pay tax. You are supposed to pay tax. So we have tax advisors who you can they are being pushed by companies to advise them as to the tax that they are exempted and the tax, you see. So if you are, and then how much tax they are supposed to pay. If you read accounting, you would understand the statement and then know the amount of tax that the company should be expected to pay. You can advise individuals who are running sole proprietorship business and then advise them the amount of tax to pay to the government. Because once you run as a business, you are supposed to pay tax. Also, you can be an insurance broker. You can be a project manager, you can be a financial analyst. These are all career opportunities for you if you decide to read accounting, if you decide to study accounting either in the university or in your secondary school career. Okay, so this brings us to the end of the first episode, which is the nature and then the functions of accounting. The nature, how accounting is, and then the functions of accounting. I hope now we have a solid beginning or background for accounting. Now we understand what we are doing. Now let's say if you want to do accounting, you know what accounting is. You understand a bit of it, even though you do not know the computations or the terminologies, some terminologies of accounting. Now you understand what accounting is. That is what we want to achieve. On PS tutorials, we want to give you in-depth understanding of what accounting is. We want you to appreciate accounting. We want to make accounting very easy for you. We want you to, let's say if they put an accounting question there, you will not find yourself wanting. You understand the basics. So when you are writing, you write confidently. That's what we want to do. We want you to understand and appreciate accounting. So stay with us, continue to subscribe, continue to comment, continue to like our videos, and then we will bring you more of this. Don't forget to share your problems in the comment section, and then we'll address it in our next video or any other video we make. We can even go live purposely for you. If you have, let's say, a particular topic you do not understand, we can go live for you alone, or any other person who also do not understand. We can just go live for you to appreciate what we are doing. Thank you for subscribing. Thank you for being with us. Thank you for commenting. Thank you for liking our videos. Thank you. KS Tutorials, keep calm. KS Tutorials, balance on. KS Tutorials, keep calm and then balance on. Thank you, guys.